Hello everybody, this is AK. I'm back. So over the weekend I made a video about UOB's chart and how the week ended with gapping down and two very bearish candles on very high volumes. And I said over the weekend that if in the next session we should see another long bearish candle on high volume, we would have three black crows form. There's a three stick pattern that we use in technical analysis to signify a very bearish situation. But of course, when we look at the chart today, nope, we didn't get another long bearish candle. Instead, we got a spinning top. Right, spinning top is when you have you have wicks on both sides of the body of a candle, the upper side and the lower side. And usually when we see spinning top, it suggests that there is indecision on Mr. Market's part. It cannot quite decide whether it wants to go up or it wants to go down. And so in the next session, it could go either way. But a spinning top, many technical analysts would say there is a sign that Mr. Market might want to push it up. Right? It's a reversal sign, possible reversal sign. So if it pans out, because we need confirmation tomorrow, if it pans out and price does go up higher tomorrow, there is a gap that was formed a few sessions ago when the price gapped down, and gaps would usually be covered in such an instance, and we could see immediate resistance at 27.16, 27.60 per share. There's a gap resistance, and if sentiments continue to be bearish, that could be the resistance to watch. In terms of momentum, the MACD and the money flow index are both still trending down, and MACD has moved even deeper into negative territory. And the money flow index is going closer to oversold territory. So it's not oversold yet. I am still waiting to see if I could collect at closer to $26 per share. Maybe 26.20, 26.30 thereabouts. But for anyone who has yet to get into UOB and they have been waiting, I think, like I said before, $27 or closer to $27 is a pretty fair price to pay fundamentally. But for those who are trading, you know, if they had bought some at 27 or close to 27, then the gap resistance could be a place where they could take some profit. But if the gap resistance should be overcome, then we see there's a 50 days moving average which is declining, which is a purple line. That should serve as the next resistance to watch, which is at $28, 20 cents, $28 and thereabouts. So for a trader, upside, there seems to be, you know, quite a bit of upside, about $1 worth. However, set a cut loss because today's spinning top was formed on the back of relatively low volume. In fact, it's just a fraction of the volume from the last two, compared to the last two sessions where we saw very bearish long candlesticks forming. Right? It's just a very small, very low volume day to today, relatively speaking. So like we always say, you know, volume is the fuel that will drive a rally. So being such a low volume day, I have very little confidence that there is going to be a rally coming, right? So because we don't have the volume, right? So like I say, be careful if you are trading, do set cut loss, just in case prices do go down a bit lower, right? So if AK can talk to himself, so can you. Bye bye.